Skylar, good morning. It's a new week. It's a really busy week ahead. What are you looking ahead to?
Yeah, I mean, I think the two most important things I'm looking at this week are the Fed and the Bank of Japan. And that's because there's a relatively low bar for a policy surprise, particularly for the Fed. Now, what the market is thinking is that there's around 8 basis points of hikes priced in, which means that regardless of the decision, that pricing has to shift, right? If you have more in line with economist consensus that they hold at this meeting, that view is largely based on this idea that, you haven't seen big inflationary pressures feeding through from oil prices yet. We had a CPI print that was a bit on the softer side last month, and that means they have a bit of space now, whereas the market thinking in terms of pricing that 8 basis points is we want to show inflation fighting credibility right away from a worse perspective. So if you do not get that hike, then you're going to see the dollar under pressure, bonds buoyed, and you get the opposite result if that does come through. For the Bank of Japan, it's because we've had signals from authorities more so lately that they could speed up the pace of tightening. And that pace is very slow right now. It's every 6 months. The last hike was in June. The next one's expected in December. And the market's just not believed them because they haven't done that previously. So if we did get that signal for September, you could see a big move in JGBs.
What else are you watching this week? There's a lot of tech earnings.
Yeah.
Something to watch out for. Tech's all over the place at the moment. The oil price is all over the place at the moment. The market feels really uncertain about a lot of things at the moment.
Yeah, I mean, I think with tech earnings, it's always very hard because we have such a high bar for them. And yes, they continue to beat them, but the market still struggles with it in that it wants to see what the forward momentum is. And there's really a big question now around who will be the winners and losers within AI. Not all companies can have the massive amounts of spending that we've had go into a high return on an investment. So there's really big questions around that. We'll get more information through the earnings season, and this is the heaviest week for both Europe and the US. But I think there's still quite a high bar for those earnings to feed into price momentum.
Let me ask you about FX. We've got the dollar on the back foot this morning as a result of oil prices on the back foot and the tensions ebbing at least a little bit in the short term in the Middle East. What does that tell us about the FX story from here then, Skylar?
Yeah, I mean, it's really, really dominated by what's happening in terms of trade. And it's actually relatively unusual for terms of trade shocks to feed into FX in such a large way. If you plot the month-to-date change in FX versus the month-to-date change in terms of trade, the R-squared is something like 90% for G10. And there are some really interesting points here in that for Europe, it's not just about oil, it's also about gas, which, yes, it's come down today, but it's still very, very high. And that terms of trade deterioration that we saw in March and April, that's still very much present in Europe. For the dollar, it means that, you're going to get some more weakness today. But if Europe is under pressure from gas prices still, then, the dollar will still be.
Skylar, thank you very much. Skylar Montgomery Koning from our Bloomberg Markets Live team.